Hi friends, this is Bank Nifty 5 minute chart being recorded on 17th March 2023. In this video, I'm going to show you something called minor demand zone and major demand zone and point of ignition and how to trade using these zones. So let us quickly jump into analysis. So to start any trade analysis, we don't require so much of backdated information. That is what I have been mentioning in the previous videos that I posted in this channel. So let's start analysis from this point, which is somewhere around 50 to 100 candles from this point of analysis. So market has been making higher highs and higher lows, which indicates an uptrend. Okay. So when market started today, after a big gap up, the sellers came very aggressively and tried to make a comeback at this point. Okay, to halt at this point. See how price is reacting when price entered this zone. There are some aggressive buyers coming into the picture. However, they are encountering also some strong selling pressure identified at the top wicks of the candle. Okay. Now, if we just put this to a little low, okay, this is the point. Now you see that this reaction is also extending to the outward frequency line. Here there is a powerful bullish candle making even higher highs. So many people might be tempted to go long here. This could be true, but however, the few candles have proven that this is a wrong trade idea going long, because sellers came very aggressively and then touched that point, which is referred to as the point of ignition. So what I meant to say in this small flow downward is that this major sellers coming from top are encountering minor buyers at this point, and since major players have more strength than the minor buyers, this zone couldn't hold the price and price has come down. So after this, the next major zone that price may encounter is the major demand zone. This is major because this zone has created very powerful and long bullish candles, long momentum, and so this is major demand zone. However, price has touched that point where buyers have earlier picked up the market, and that we are mentioning here as point of ignition. Okay, so price touching that line and then creating higher highs is an indication that market may not again touch this major demand zone, and price is retracing without even touching this demand zone. So that only signifies the strength of buyers at this point. Now once price has touched this line and created higher high, now you see that the same zone which was earlier acting as some sort of support is now acting as support again with the formation of the small bullish candle. So this look like very small, but let us see how big that has given a long bullish momentum. So how do we identify if this could be a potential entry is what we are going to discuss. Now the trade context so far is that the minor buyers are not able to hold the position and price is not even touching the major demand zone. So price is bouncing back in between these two zones, and that is point of ignition. And once price has broken this zone again, the same zone is acting as some sort of support. At this point, we can draw a pitchfork between the price extremes A, B and C. So I am choosing this as the price extreme because this is the next major zone that we can discuss. Now you see that the same zone is now acting as support. At the same time, this pitchfork is also giving a very good edge at its outline. So now there are multiple techniques intersecting at this point. One, the minor demand zone acting as some sort of support, outline of the pitchfork respecting price, and a powerful bullish candle. Though it look like small, it has a lot of meaning. So there are three techniques intersecting at the same point. We can also draw another pitchfork within the minor dimension. You can see here A, B and C. Let me indicate that in black color. So now you see that the minor flow is also being respected by pitchfork when A, B, C pivots are chosen as the initial pendulum pitchfork to be drawn within this minor flow. So now there are four techniques intersecting at the same point, giving rise to a wonderful trade idea. Now we might be having one question. Price didn't close above this high, isn't it? So this could be a manipulation drive because the price didn't poke this level and then falling back. So either this could be a manipulation drive by market makers, or this could be a real move by buyers to take the market go long. So we have two chances here. So when price creates hits this barrier and create a bullish bar, we can enter a short trade area with a small stop loss above this high. When price touches this this minor demand zone and creating a bullish bar, we can again think about a long trade area with a small stop loss below this low. So in either cases, one of them is going to win, isn't it? So once in this case, it is proven that the buyers have hold the position with a powerful candle like this. So see how the same line is now acting as some sort of support for price to go up. So this could be another re-entry for you. So price has given three chances. One, at this point, if you are crucial enough, if you are keen enough, you could have taken a long drive at this point itself. If not this point, if not this point. So three chances for entering a trade. The target is obviously the midline of this pitchfork. So this is how we have to analyze market, guys, and enter and exit trades. If you're interested to learn these advanced techniques, do reach us out and we can train you in many great ideas. Thank you so much. See you in another video. Bye bye.